We have Mayuresh Joshi who joins us. He'll be helping us with the fundamentals, and you have Ruchi Jain as well, who'll be joining in to help us with the technicals. Good afternoon, gentlemen. An hour and a half towards the weekend, but let's try to be of some help before we get into the weekend. A lot of queries coming in there, so let's get straight to a couple of them. We have Ravi Dutt, who writes to us from New Delhi. He holds around 193 shares of Piramal Enterprises at a price of around 1,350 rupees. I think he's got around 650 shares of Gujarat Gas as well at around 335 and around 455 shares of ITC. So all those three come up for you on the screen. He wants to know whether or not to hold or to sell. Mayuresh, let's come across to you first. What's your view on all these three stocks? Piramal Enterprises, Gujarat Gas and ITC.
Afternoon, Nigel. Afternoon, Sumaira. I think it's a good mix that he's probably got. The only issue that Piramal faced because of the slowdown and because their disbursements came off quite significantly, the AUM has just been stagnating around that 51 odd thousand odd crores. Now within their four elements of their business units, retail lending is expected to significantly contribute to the overall AUM. So even within retail lending, I think the retail housing loans that they're probably looking at is something to be watched out for. Now the past 1 year since the lockdown, Nigel, they've been trying to reduce balance sheet debt. They've been trying to bring down the large client exposure in the wholesale business. And I think they've been pretty successful over the past few quarters. I think so that started to show up in terms of their earnings. But I think still some amount of stability will be required. So yeah, I think with a medium term view, you can probably hold on. There are strong supports around at 1250, 1260 odd levels for Piramal. For Gujarat Gas, again, the expectations largely in terms of the polluting areas in Gujarat, what we probably heard in terms of Morbi, the gas that it provides to, I think ceramic players have inched up, and the demand for tiles, for faucets has moved up quite significantly. Input costs have been quite reasonable, so the kind of spreads that are making the volumes specifically on the industrial fronts is holding up for Gujarat Gas, and there is a huge possibility of more polluting areas coming under its kitty, along with more CNG part of the business also improving, and a part of their North Maharashtrian business also expected to improve in terms of CNG and PNG both. The third stock, ITC, I think had been a laggard for a major part of this year. It crossed its psychological level of 200. Expectations largely are that the other FMCG business and the volumes thereof should start holding out. Agri-business should start lending a good amount of support. Paper business has started inching up. Paper prices coming up pretty smartly. Revenge tourism might bring some amount of joy to its hotel business going forward. And the cigarette business EBIT has held on, but the diversification is probably expected to work out in terms of EBIT margin and the overall improvements. Cash flows have always remained strong, and valuations are always on the stronger side for ITC compared to its other FMCG players as well. So yeah, I think Piramal needs earnings consistency to come through. He can definitely hold on to Gujarat Gas and ITC at this point.
Hi, welcome back. You're watching Your Stocks. The next query that we have coming up is from Ramesh, who has written to us from Hyderabad. He has 770 shares of Ashok Leyland, which he has bought at 97. He's a long-term investor and now wants to know what he should do. Mayuresh, for the moment in Ashok Leyland, what would you say if you're just shy of $100?
Yeah, afternoon, Sumaira, first of all. So I think he can hold on to the stock. I think the worst in terms of the CV cycle is probably behind. What we had seen even before the pandemic of what was happening in terms of the last mile connectivity, what happened in terms of the axle load norms, tighter financing, BS6 issues, I think, and the pandemic related issues in the past couple of quarters, I think that should probably be behind Ashok Leyland and the majority of these CV players as well. So leadership in the MHCV category, almost 32% odd. The bus category has been hit, but I think the LCV innovations that they have done, the kind of platforms that they are introducing, Phoenix, for example, within that, I think Bada Dost, which has got introduced, addresses the addressable market size. And therefore, I think the EBITDA margin expansion can come through in the next couple of years, come back to that high single-digit mark. Balance sheet is relatively strong, so I think if you presume that this year is going to be a washout for most commercial players and the ancillary players as well, it can be a strong rebound on the ROEs and the ROCs. ROE is expected to come back to those higher single digits, double digits as well in the next couple of years. anything on the scrappage policy, which in my opinion can come through in the next few months, I think that's an added incentive for all these CV players. So yeah, I think that can be held on as per our methodology. A lot of support around that 85 odd levels if he's looking from a chart perspective as well.
Okay, all right. Well, just a short while back, we were highlighting the way IRCTC has bounced up from the low point of the day. And in fact, our next query is coming from Mr. Hitendra. He's writing to us from Ahmedabad. He wants to know whether or not it's the right time to invest into the company with a 5-year view. He's saying that, is this the right level, in fact, to get in? Mayuresh, do you think it's the right time to board the train?
Oh yes, I think whether you want to book a Tejas or whether you want to go in for the Rail Neel. So yeah, I think Nigel, I think the kind of margin deterioration that we've seen because of the lockdown, I think it's a pure play story in terms of the unlock mechanisms that the economy is going through. As we are getting back to normalization levels, as train services are getting back to gradual resumption and full resumption in the next few quarters as well, I think the EBITDA margins that it enjoys on the catering business, as an example, in excess of 50% in terms of internet ticketing, around 25% the tourism part of their business as well, which should start catching up in the next few quarters, and the Rail Neel part of the business, as I was saying, almost around 10.5%. I think very stable sort of businesses. Again, monopolistic business, so I think there is no two ways about it, right? And therefore, I think the kind of margins that they will pose, the kind of cash flows that they probably report are exceptional as well. I think just a divergent view. I think no harm in adding at the current level. But again, in excess of 1600, I think that's where I think a lot of supply and consolidation for the stock is. As per our O'Neill methodology, if it's able to exceed that, I think a lot of supply will be taken care of by the stock itself. And it's a beautiful story anyway to be played out over the medium term. So I think a little bit different in terms of the O'Neill view. I think 1600 plus, I think that's the right addition in our opinion to add this stock.
Okay, the next query is on sale. Padma has written to us from Kerala. She has 300 shares, which she bought at 175. Wants to know now whether to book losses or to average the stock. Mayuresh, first to you on sale. How are things looking now? And do you think things could be on the mend soon?
So I think the master for ferrous and steel is sitting right beside you, Sumedha.
Yeah, I almost did ask him, and which is why I fumbled. But Nigel, do you want to take a shot?
No, I think we'll stick to the experts. Mayuresh, I'm giving my view almost every day on it, so let's hop across to you.
No, I think it'll take a long time for the earnings recovery to come, but I think the worst is probably over, right? I think what the management is trying to put forth in terms of deleveraging of their balance sheet, steel prices have relatively held out pretty well. I think the coverage that Nigel does on steel prices and ferrous is commendable. So I think the kind of expectation that one has, both in terms of demand, and though iron ore prices have gone up, I think the kind of expectation that value-added products as an addition to SAIL will have, I think that will provide earnings support going forward. But I think at the price that he's bought, and what the price is at this point of time, it will take a long time for recovery to happen. Though I think the sector is probably well placed in terms of demand and in expectations of deleveraging of their own balance sheet as well.